Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that a like and subscribe. So, quick update. Let's start a little bit with the macro. There are a few things that I covered in the previous video that I would like to cover this time around. I think they're important. Sometimes they can get a little bit lost in translation. So what you have right now is you have a lot of countries adding liquidity the old way, the cutting of rates, the QE. And the reason why you see that, for example, in places like the UK, places like, in Europe with the ECB, it's because QE does not have the same negative connotation that the US does. So what's going to happen, in my view, this is just my opinion, I don't think we're going to hear QE again. Not because they're not going to do it. There's actually evidence that the banks are doing it already, but they will call it something else. I don't know. Project Freedom. What else? Calibration of financial systems. Whatever they're going to call it. It's not going to be QE because people are not liking that name anymore. QE. QE is essentially currency debasement and inflation versus assets. But you see, no, they would never say the words debasement of currency because people know, or then they can, debasement currency equals inflation, even if it's against assets, which people say, oh no, that thing is bad. But quantitative easing means making something easier. Right? Everyone likes easy, they don't like difficult. So those are some of the tricks. I mean, particularly the Americans are very good at this. They will come up with a name. So I see it in two ways. Either they do it on the background, like they've started to do already, or they will call it a fancy name different than QE, but that in effect is QE. So the issue all the developed world faces, but not just the developed world, China is in the same boat, for example, is the issue of the levels of debt. The world has decided, or the developed world has decided, that we're not going to have a 1929 style of depression ever again. So the way we do it is we debase the currency on average 8 to 10% per year. That results in asset price inflation, as long as the banks are in the middle, being the gateways of liquidity. Meaning, as long as 80% of the population is over indebted, if they try to go to a bank and ask for money, even if rates are at zero, the bank turns them down because they have too much debt. They'll tell them, no, you have student loan debt, car debt, mortgages. Forget, I'm not going to give you any money. Oh, Mr. Elon Musk, you want $300 million at 1%? Sure, here, take it. But the issue is then they don't spend, because, just because they have $300 million. It's the same principle of what we discussed before. If you have $300 million, are you going to start eating, 7 dinners and 5 lunches? No. You're going to have 1 dinner, 1 lunch, maybe more expensive than before, but it's not going to be the equivalent of, let's say, 4 people having dinner. Most likely, or most of the times. So that's why you don't see typically the CPI inflation. Now, the CPI has been high mostly because in 2021 people were given direct checks without the bank serving as liquidity stopping section, if you will. And then you had huge issues with the supply chains worldwide, not just China, but China was a big deal. And you had all the regulations made by the Biden administration making oil and gas extremely prohibitive in terms of cost, and energy is by far the most important industry in any economy. Why? Because it touches everything else. Packaging, food, transport, shipping, even medical devices, you can't believe that. Manufacturing of chemicals, because these plants consume a lot of electricity. So if gas is high, electricity goes up, heating goes up, which means chemicals, petrochemicals, plastics. It doesn't matter what you think, it's going to be impacted by that. So that's the basis for the Drill, baby, drill. That's the idea. Now, what typically happens with the US is the following, and the rest of the world. The rest of the world puts tariffs on the US, and the US doesn't put them, or at least at the same level, back, meaning the other way around. So yes, it's much easier for an American manufacturing company to go to Europe or to go to Asia, have all their manufacturing there, and then, sell the cars back into the US rather than making them in the US. And because usually if you have a subsidiary over there, you bypass the tariffs. So for example, you can have the US stamping tariffs on steel, but you can have an European company with a big subsidiary in the US. And so for legal purposes, that entity is American, so that entity can purchase and can manufacture steel and sell it without the tariffs, despite the ultimate parent of the group being an European or a Japanese company, for example. So that's one of the advantages of being a very global company. But the issue is, for many years, the US didn't care because the US has the reserve currency. So what the US would do is, okay, we have a trade deficit, we just borrow the money, and then we pay with borrowed money. The people that sold us hold those dollars. Many cases issue dollar debt, and then they need to service that debt in dollars. Now, here is the problem. More than half the trade in the world is made in dollars, and countries hold dollars as a second currency rather than their own. So, for example, if you're in a country, let's say in a European country where your currency is euro, your number two currency in reserve will be the dollar. And you'll have huge amounts of dollar debt to match your dollar cash flows. That's the idea. Now, the problem is there's only one person or one entity, if you will, that can print dollars, the Fed. You see, the ECB can't. You can have swap lines and all of this kind of stuff, which injects liquidity into the system on an indirect way. Maybe that's going to be the thing that's going to be used. But the dollar gets too strong. So when Trump got elected now, much like 2017 or 2016, the dollar was strong, interest rates were high. So Trump already said, we need lower rates and we need a lower dollar. Sounds familiar? Yes, because he said the same thing in 2016. And what is he doing? So, for example, when he's dealing with a Canadian or with the Canadians or with the Mexicans, because they are so dependent on the US economy, he can just brute force them into doing, frankly, what they should, right? They should patrol their own borders. That should be a but now in today's world, the most basic of things apparently is, a great achievement of enlightenment. Oh, maybe we should secure our borders and our neighbors, close to our neighbors as well. What a shock! What a revelation, right? But with other players like China, the big US advantage, because you see, the Chinese economy is extremely dollarized. It has huge amounts of dollars. I'm not talking about the government per se, but the major corporates of China all have massive dollar debt, which means that when the dollar starts to get very strong, and they have dollar debts that they need to service, the strong dollar strangles the rest of the world, because the rest of the world has a lot of dollar debt. And there's not enough dollars to go around, so that's why you see the Dixie, the XY going up. It's not because things are getting cheaper in the US when you go and buy your groceries. It means in the financial world, the dollar is getting scarce very quickly, and it's starting to put a lot of pressure in any country that holds dollar debt, particularly if they hold a lot. You see, the Chinese have an issue, which is nobody trusts their currency, neither their government. So they need to peg their currency to the dollar. That means link it on a certain ratio. But the issue is that they are facing huge amounts of debt deflation, which is very aggressive. and they need to stimulate not today, yesterday. And they need to print money immediately. But if they do it with the dollar the way it is, they lose the peg and they're screwed, because the little bit of confidence that the world had in their currency, poof, evaporates on the day. So that's why, for example, Trump has given you a few clues. He said, as I'm imposing these tariffs, interest rates need to come in tandem with the tariffs. What is he saying? When I go to China and I negotiate for certain things for the US, I need to promise them a lower dollar. That only happens, or that happens more in a more controlled way, if we cut rates. That's what he's saying. He said it again. He said he started negotiations with Putin to end the war. And he said, we talked about many things. He even used my phrase common sense, and we talked about a strong dollar. Why are they talking about the strong dollar? Same reason. You see? You get these little clues. The reason why I took a little bit of time to go through this is that these things are happening right now. You see, there are two things which are very important, which is TLT is starting to be on the rise, the bonds, and the dollar is starting to go down. You remember I made a video here, I said very recently, I think we may have just put a double top in the dollar. One back in November at around 110, or in December, I don't remember by heart, but 110 or so. And we've put in now one with when the first tariff conversation started. Have you noticed that Trump has made a tariff plan and the stock market goes up? What did I say as well? The first news about the tariffs impacts the market a lot. After a while, it becomes irrelevant. Just like when we had the zombie virus. Remember, every time we had a case or every time we had news, the stocks would crash 10, 7, 8%. And then, after a while, news were much worse and nobody cared. Same thing when the vaccines were discovered. The first vaccine, I think it jumped the S&P 7%. The second vaccine, 3.5%. By the eighth vaccine, the stocks barely moved. That's my point. The market starts to price in these matters. Another thing very important. The business cycle has bottomed. We had a reading above. So basically, it's ISM is very simple. ISM above 50, expansion. ISM below 50, contracting. Simple. We've been in contracting mode for more than 2 years and a half. And we now have crossed the 50. The reason why we had an accelerated cycle in 2021, one of the reasons was not just the China banning Bitcoin, was also ISM peaked in March. Bitcoin peaked 19 April at 65,000 during the Coinbase IPO. Yes, we did make a new all-time high in November, a 6% new all-time high after ridiculous amounts of leverage in the system that end up blowing up BlockFi, Celsius, FTX, Three Arrows Capital, Dongguan, etc. But that was the reason. Now, and the question is, why is it a month after ISM peaks? Because you only get the report of March in April. So you only know that you most likely have peaked a month later. So that's why you have a 1 month lag. Makes sense. So let's go back. We have bonds rising. We have the dollar falling. Today we had gold falling quite a bit. Is it the end of the move? I don't know. Look, gold needs to go to $5,200 to break even from 2011, adjusted for CPI and money supply increase. $5,200. If you look back at the top in the 1980s, gold needs to go to $35,000 to break even from the top in the 1980s, adjusted for CPI and money supply increase. So yes, I mean, I know Peter Schiff is throwing parties on a weekly or a daily basis nowadays. He knows what I just told you. He knows what I said is absolutely true, but he doesn't tell you, because if he does, he cannot sell it to you, the gold. So that's why he won't tell you. But if you push him, he will admit that gold needs to go above $5,000 just to break even from 2011. Because he's obsessed with inflation, right? Well, what are we also seeing? Bitcoin's close to 100K. Ethereum has risen to 2,750. Ethereum has been the laggard. If we repeat 2017, let's say, to a T, then by the end of February, we would have Ethereum above $4,000. When I say above $4,000, no, give it a little bit of room, right? Plus minus 2%, whatever, and plus minus a week. Okay, so if it's 5th of March, it's still okay. Around $4,000. Does that mean that if we are not above $4,000, the bull market is over? No, it means that the fractal of 2017, it now becomes less reliable. So we are no longer matching up to 2017 to the T, but we are deviating to a certain degree. That means that our predictions become more difficult to make, and our strategy becomes much more based on other factors. For example, is the Bitcoin dominance going down? So for example, are altcoins expensive at the moment? No. Altcoins are expensive when the Bitcoin dominance is in the low 40%. Then you're expensive. When you are in the low 40s, when Bitcoin dominance is in the 60s, altcoins are cheap. That's all I know. This is cheap. So that's the principle that I follow the most. I still think the predictions that I made will happen. What I'm trying to say is, of course, if we deviate from the cycle, we need to adjust. We need to be mindful of that, and we need to look at more than one thing. It stops being as easy as grab your chart from 2017 and copy paste it, just look at it. It becomes a little bit more challenging, but that's it. But what I'm trying to say is, because I've already seen this on Twitter, by the way, people saying if Ethereum is not above $4,000 by the end of February, we are in the bear market. No, we are not. It just means that the fractal of 2017 is now less relevant than it used to be. Period. That's all it is. But I hope that that's clear. I mean, I wanted to really make it clear, because I can already see the comments if we don't get there. But I think we've been pulled as a slingshot. I'm seeing a lot of positive. Let's say the big scheme is being prepared. Trump has bought more Ethereum this week again. BlackRock did the same. I tend to believe they know something that I don't, and that they have more money than me. Does that mean that just because they have more money, they're going to be right and Ethereum is going to rise to the moon? No. As you guys know, I don't have Ethereum. I use Ethereum as a likelihood or as a proxy of strength of my altcoins. Notice what happened to most altcoins. Yes, you can find some exceptions, but look at the most altcoins what happened. Some altcoins like Chainlink have nothing but good news. Nothing but good news. Trump is buying it, people like it, more usage, whatever positive news you can imagine, Chainlink got them. Performance was still meh. Why? Because Ethereum was not high enough. This is very important to understand. I want Ethereum to go up, not because I have a huge bag of Ethereum, but because my coins will benefit from it. See what I mean? And I do think Ethereum is going to go up. And I suspect that the rally will be very aggressive, because most people have given up on them. So the only thing left in that coin is basically true believers at this stage. So let's see what happens. I think it's going to be a curious time. If I look at March 2017, Ethereum had a monstrous performance. I don't think we're going to go up 180% like we've done during that year, but I do think that we can have a very, very strong year. And with that, guys, I do see a lot of, let's say a lot of pieces on the chessboard, if you will, falling into place. And maybe the white swan that we're gonna get is the end of the war. Somewhere in the summer, for example. Possible. It's possible. We'll see. We'll see what's gonna be. It needs to be something strong enough. Maybe a series of white swans. I think we're gonna have something so positive. You need something so positive that will actively convince people that we're not gonna have a bear market. That's it. There's no way we're gonna have a bear market. You need people to think like this in order for the bear market to come. And with that, guys, thank you very much for your support. Don't forget, drop that like and subscribe, and I'll catch you in the next one. And I still coughed a little bit, but it's much better. Don't forget, enjoy your weekend. It's also important. And I'll see you in the next one.